Hello and welcome to the inaugural Melbourne EdTech Summit. I'm Sophia Hyland, I'm the marketing coordinator here at EduGrowth, and I'll be your MC for the rest of this afternoon. The Melbourne EdTech Summit connects educators, EdTech entrepreneurs, and industry stakeholders for profound discussions on the future of education innovation. Each morning, we've been focusing on thought leadership, featuring some of Australia's leading minds at the intersection of education and digital innovation. In the afternoon, we focus on EdTech entrepreneurship and the future of Australia's EdTech ecosystem led by experienced Australian and global EdTech entrepreneurs. The Melbourne EdTech Summit is only possible with EduGrowth's partners, Global Victoria, Praill, and AWS EdStart, who have helped bring this program to life. As we gather today physically dispersed and virtually connected, allow me to pause and acknowledge the traditional owners of Australia and recognize their continuous and unbroken connection to the land, waters, and culture across the country. Today, I join you from the traditional land of the Bunurong and Woiwurrung people of the Kulin Nations. I extend all of our respects to their elders, past, present, and emerging, in all of Australia, including from where you are joining us. I add specifically my respects to Aboriginal and Torres Strait Islander people present with us today. Let me briefly highlight some of the features on the conference platform. You can see the complete agenda by clicking at the bottom and then selecting any one of the days. You can build your own private schedule by clicking the heart icon at the bottom of each session. Your personal schedule will then be accessible from the heart icon at the top right. Clicking the Details tab on any session allows you to read more about the session and the presenters. This is where you can ask questions or have a chat with fellow delegates. Using the participants icon at the bottom will show you everyone at the summit where you can connect with anyone or even arrange a video meeting or chat. I would now like to introduce you to Craig Harrison, Executive Director, Investment at Invest Victoria, and David Linke, Managing Director at EduGrowth, for the official welcome.
Thanks so very much. Thank you very much, Sophia, and welcome, Craig. Let me begin by welcoming everyone to the Melbourne EdTech Summit. I'm David Linke, the Managing Director of EduGrowth, Australia's education technology and innovation industry hub. Through connection and collaboration, we accelerate Australia's EdTech ecosystem globally. EduGrowth exists because Charles Sturt, Deakin, Griffith, La Trobe, Monash universities, along with Maddocks, believe that Australia can be central to the digital transformation of education here and around the world. These organisations founded EduGrowth in 2016, and today we have hundreds of members connected into our programs. On behalf of all of our members, I thank our founding partners for their original and ongoing support. The Melbourne EdTech Summit has been connecting over the last 3 days 1,300 delegates in a conversation with 83 speakers. Each morning we've been focusing on thought leadership, and each afternoon we've been focusing on entrepreneurship. Allow me a small moment of personal reflection before I hand over to Craig, and that is 2020 has been an incredibly challenging year. I would like to extend our sincere thanks, gratitude, and acknowledgement to the teachers of our world. Whether you're a school teacher, an academic, a vet teacher, or in corporate training, I want to say thank you. You and your dedication has ensured that Australia has avoided an education crisis in the midst of this health crisis. I hope we as a nation remember this for a very long time to come. I know I certainly will, and I extend my thanks. Over to you, Craig.
Thank you, David. I would also like to begin by acknowledging the traditional owners of the land on which we meet and pay my respects to their elders past, present and emerging, and also pay my respects to the Aboriginal elders of the different lands on which we each are working. Welcome, and on behalf of the Victorian Government, I'd like to say how pleased we are to be a major sponsor of the inaugural Melbourne EdTech Summit. It's a wonderful pleasure to see people joining us from all around the world for this exciting 3-day programme, which will explore and celebrate EdTech and innovations in education. So, my name is Craig Harrison. I'm the Exec Director for Invest Victoria, which is the Victorian Government's investment attraction and facilitation agency. We work with our global network of trade and investment offices to help international businesses expand into Victoria. Due to the strength of Victoria's tertiary sector, EdTech is a key priority of the digital technology focus within our strategy, which we released early in 2020. Today, due to the challenges of international travel and the need to limit the spread of COVID-19, more people are working, teaching and learning remotely. Although this has brought various challenges to the way education is administered and delivered, it has presented a unique opportunity for us to rethink and reimagine our future in digital technologies and the accelerated investment opportunities in EdTech. The Australian EdTech sector almost doubled in size between 2017 and 2019, with a greater number of EdTech organisations progressing from startups to scale-ups, according to the 2019 Australian EdTech Census. Victoria's thriving EdTech ecosystem, skilled workforce, strong research capabilities, and a deep and growing pool of students and graduates presents a range of opportunities for international EdTech companies. Educational technology in particular has not only allowed people in rural Australia and developing countries to access quality and affordable education, but also provides a platform for working adults to engage with learning which may not have otherwise been possible in a classroom setting. It's fair to say that digital disruption is driving unprecedented reskilling and upskilling, which is also driving demand for rapid innovation and the scaling of education services targeted toward emerging industry needs. Over the past few years, we've seen the vet and enterprise learning segment of the sector become the most popular to invest in, followed by the K-12 education sectors, and roughly 32% of Victorian EdTech companies are working in the K-12 sector. Victoria has a strong record of major investments, and these include A-Cloud Guru, Melbourne-based enterprise training firm, which secured funding in 2019 from investors including a US growth equity firm, Summit Partners, enabling it to expand its international customer base. Also, employment marketplace Seek invested $115 million to create a joint venture partner in online course provider online education services in 2017. Invest Victoria is committed to the sector by bringing even more of the most exciting and innovative global activities to the state and facilitating international engagements and partnerships with education. Afternoon's entrepreneurship stream of the summit for the EdTech investment landscape. We have an important discussion on capital raising, a panel of investors.
Oh, hello. Thank you. Thank you so much, David and Craig, for officially opening the afternoon's program. Our first session that we'd like to kick off this afternoon will explore the tricky subject of navigating capital raising. Before I introduce you to Robert Gregory, who is the National Education Sector Leader at Maddocks, we have a short video to play on some of the great things Maddocks is doing. Hello, Robert. It's my pleasure to introduce you today. We're welcoming Robert Gregory as moderator for today's first session of the afternoon. Robert is an experienced commercial lawyer leading Maddocks' national sector team with deep experience advising universities, private sector education providers, schools, and education leaders in relation to governance and commercial matters.
Thank you, Sophia. We might also start with introduce our speakers as well, if we may. I might just quickly start with some observations, both about my firm, Maddocks, but also the topic today. So we regularly act for founders, private equity, institution, even trade financiers to help capitalise new and established and growing businesses. Capital raising is always one of the most challenging aspects of the creation and growth of any business. On the flip side, inadequate capitalisation and failing to access capital adequately makes everything so much harder. It always seems to take longer and involve more work than anyone could reasonably expect, particularly when starting out in a new business. So today we have the opportunity to learn from and hear two experienced and expert professionals in the field. So if we can join in Genevieve and Tim at this point. Thank you. Hi Genevieve, hi Tim, how are you both?
Hi Rob.
So what I might do is I'll do a brief introduction, perhaps starting with Genevieve, and then Genevieve, I might just ask you to sort of address some of the things that you as an investor across many sectors find appealing about the EdTech sector first. So Genevieve is a partner for Australian private equity manager Colinton Capital. Colinton partners with business owners and senior management to unlock the growth potential of their businesses. Genevieve is a past Deputy Chancellor and Chair of the Finance and Investment Committee of Western Sydney University, and also the past Managing Director and Co-Head of the Australasian Special Situations Groups for Goldman Sachs, based in Sydney. So Genevieve, perhaps just starting with you, as an investor across many sectors, and when you're looking at where to allocate your and your clients' capital, what are some of the things that you think about and what makes the education sector, the EdTech sector particularly interesting to you?
Thank you. Thanks, Rob, and everyone for putting on the conference. And this is my first ever video conference, so I hope I can do it justice. But first and foremost, I wanted to initially acknowledge the traditional owners and also thank, the Victorian government for hosting and actually investing in education from an educational perspective. I think it's great that, the state governments are getting behind EdTech, so thank you for that as well. But really now to answer your question, Rob, which is, what makes it an interesting sector? And, probably when, I need to sort of say this up front, that a lot of these comments are probably applicable to many industries, but as it relates to education in particular, I think one of the things that we always look for when we're making investments are what are the tailwinds that are sitting behind a sector. And one of the lovely things about EdTech or education in a broader thesis is it's a very large target addressable market, so a TAM. And there's some, I guess when you look at some of the research houses that actually publish, what a TAM is for 2020, the TAM for education globally is 11 trillion US. And, it's forecast to grow to about 18 trillion in 2030, which when you look at that and you say, well, kind of how do you break that down and how do I get a piece of that action and where do I play? Certainly, the largest sector in that is obviously in labour and obviously public education, but you can break it down into services where I think EdTech plays into that services sector, and it's running around a 30 billion TAM, which is certainly the fastest growing and probably in need of, a whole bunch of things. And when you think about services as it relates to EdTech, it can range from accreditation to equipping institutions to shift online, and it can be a hybrid of how you deliver that mode of education. But so, TAM is a really, really big thing that we look for, and, it's a great thematic, and that's one of the key things that makes it very interesting. The other thing that I think, is peculiar to Australia is that the brand Australia has many preeminent, education institutions, particularly in the higher ed. And, those institutions, even though they may predominantly be bricks and mortar institutions, actually credentialise the whole sector globally. And that actually credentialises any entrepreneur who's trying to start an education business here in Australia, because that is the halo effect that those institutions actually create for the individual company. And the last thing that I think is worth mentioning as to what's attractive about EdTech for me is that, I think one of the silver linings that we can potentially take from COVID is the acceleration of digitisation that companies and all sectors are actually going to go through. And certainly at Colinton, we've been looking at investing in digital transformation companies that are actually helping that acceleration. So hopefully, Rob, that answers that question for me.
Thanks, Genevieve. I think that was a really great and interesting start. Tim, I might throw to you and introduce you for the purposes of the discussion as well. So Tim has extensive strategy, investment and corporate development experience. He's an advisor to startups on growth strategy, build business model design, and also their fundraising strategies. He's also, relevantly, I guess, for today's discussion, the past head of corporate venture capital and head of strategy and transformation for the global education company Maddocks. Tim's currently a board member of Global Study Partners and holds an MBA from London Business School. So, Tim, could you talk to us what attracted you to EdTech and what you think is particularly interesting about the EdTech investment sector?
Sure, thanks, Rob. So I guess my background's always been in human capital industry. So I was involved in management consulting and law prior to joining the education company Maddocks. I think when you come from that background and you start to look at the potential of people and how really human capital can kind of maximize its potential, you start to kind of really understand the role that education plays in society. And I guess from my personal journey, like I was the first person in my family to go to university, education's played a large part in my life. I think EdTech as a sector was a natural fit. I had the opportunity to join an education company and had the opportunity to make early stage investments in EdTech companies. So I think EdTech, you could almost argue, is the coming together of myself and the sector that I'm deeply passionate about. I've stayed involved very heavily since then. My current role is COO of a fast-growing future work business, Faethm, and I look forward to spending the rest of my career in this sector.
And Tim, perhaps just picking up on your last comment there, what about, what have you experienced in sort of seeing some of these businesses going from the early stage into becoming more mature businesses, their need for capital, how they've accessed capital, and some of the things you've seen along the way, if you like, from the businesses side itself?
Yeah, I mean, every sector believes that they're uniquely different, but in reality, Genevieve can talk more eloquently about this, but they're probably not. They share a lot of similarities. We still have the same financing structure in education as we do in other sectors. We have a relatively robust angel market in Australia, and then we have a VC sector that's increasingly becoming interested in education, and then we have a private equity sector that's becoming increasingly interested in investing in scale-ups. I think the sector dynamics are very similar. I think from an investment perspective, I think the challenge that a lot of startups face is that the usual chasm that they have to face in terms of kind of gaining traction is usually the point at which a lot of companies have to go international. And it's that combination of kind of growing within Australia, but having to go internationally to gain the next level of growth is something that usually requires a significant amount of capital. So they can sometimes find themselves in this catch-22 situation. But I'd say since I've been involved in education full-time over the last 4 or 5 years, I've seen the sector become a lot more relevant to, I guess, traditional investors. So VCs and private equity organizations that have the option of investing in multi-asset classes. I'd say 5 years ago, it was probably more, heavily linked with, say, social impact investment. Now I'd say there are a lot of very traditional VCs and private equity firms that are viewing it as a very interesting asset class and one that can generate the types of returns that they need to generate for their shareholders.
Thanks. When looking at it from an investor's perspective, are there particular things that you're looking for in a business or an opportunity that would be attractive to you, or conversely would be particularly concerning about it? So picking up on the broader sectoral comments around TAM, but then perhaps into more specific business plans and approaches that people are looking at.
It's kind of, it doesn't really matter what industry when I make this comment, as well as what Tim was saying, but certainly what we look for in a business is it has to have a really good reason to exist. Like what is unique about that business, and what problem is it actually solving, and does it have a business strategy to actually match that? I know that's very generic, but you can see when you start looking into business models whether that model actually has merit, and therefore can it actually make money and be commercialized. So one of the things that probably just to get some vernacular sorted at the beginning of this panel, which might be helpful, EdTech can be venture capital, it can be private equity, it can be listed, unlisted format. So there's many different ways that you can access capital, but I don't really know the audience here and exactly, who's in this entrepreneurial panel, but, there are, obviously you can start with an idea, and that's certainly in the angel seed investing sort of space, and that's worth just distinguishing. So that might be where you really are bootstrapping something. Venture capital is you've got something a little bit more with momentum, you might be still cash flow negative. Then the next sort of phase, you enter into late stage venture capital where you're about to break even in a cash flow sense, or even you might be cash flow positive. Typically, private equity enters once there's a little bit more stability in the cash flow, and that tends to be where I play. But and then you obviously can get larger scale private equity as well, so that's more stabilized and certainly more of a household name. But all of that matters because depending on who you're talking to, they're looking for different things. So that's a long way to answer you there, Robert, but some of it has got to do with who you're talking to and what phase of life the company is in.
And one of the things I'll just add to that, I guess, which is one of the specifics about Australia is the the ASX and the fact that there is a relatively large microcap market. So you tend to find that there are organizations such as Regal or other organizations like that, which do invest in education companies, I guess, leading into that IPO, and them IPOing on relatively small revenue and potentially not even break even. I would say there's dangers associated with the microcap market, but that is definitely another player that exists in the Australian funding scene. I would say one thing about Australian businesses as well is that a lot of the startups are forced to kind of enter break-even phase earlier than, say, their US counterparts. And that's kind of partly because they have to in order to maintain relevance and size and kind of get into the next level of funding. But if you look at the, say, US companies, they'll expect to run at a loss for a lot longer than, say, an Australian company on average, unless that Australian company gets access to international investors early.
Mm-hmm. Maybe I'll just add to why that sort of exists in Australia, and it's partly because when that company is starting out, they tend to address the Australian market only. So when you're assessing it as an investor, and why an investor wants it to break even a little quicker, is because they're only looking at the Australian addressable market to begin with. If you've got a format that absolutely has applicability to go to the next level, you can actually look at the TAM in a bigger way. And that's really why in the USA allow them to run a slightly more negative cash flow for longer, because they're looking at the US TAM as the benchmark for that, because they're plowing in a ton of marketing capital into that. And that's why they allow, or investors allow them to run a negative cash flow a bit longer.
We're getting a few questions starting to come through, and we'll start addressing those shortly. I suppose for the purposes of today's discussion and picking up your point, Genevieve, I think probably for most of the audience, it's sort of that angel VC private equity sort of phase, potentially looking to IPO in due course. And probably for the purposes of the discussion, we're focusing more so on equity markets rather than debt. With that in mind, and sort of picking up your last point, does the really quite rapid rate of change in education technology, and I think with COVID-19, we've just seen a massive acceleration of that in the last 6 months. Do you think that is a plus or a minus? And then how would you link that into scalability? So taking a business that's addressing an Australian market, perhaps to addressing a regional or global market?
Oh, look, I think, I think what has occurred because of COVID is the delivery of education has had to accelerate. It's had no choice. And therefore, the teachers, the professors, the people who've probably been a little reluctant to change their teaching methods have had to change. So everyone's obviously working out how to provide that education in the most constructive way to the learner and to the student. And I would say that, how they're probably, everybody's learning a little bit at this point to how to make education online effective, if I could put it like that, and meet some of the human elements that a receiver of education needs to receive. So, content and how you provide content, flexible content providers, there's going to be a ton of things that come out of this that are actually really positive for the sector. And I think, that's only a good thing. So I think it will accelerate, is my view. I think it's going to be able to accelerate more. I guess for your second question, can an Aussie company really grow internationally very well? Absolutely, I think they can. And, it all depends what the problem, what the need, how they're solving it, how uniquely they're solving it versus competitors, and obviously, what credentializing customers they can get on board as well.
Yeah,
and
I'll just add 2 points to that. Apologies for cutting in. So, number one, for some Australian entrepreneurs, turning themselves into $1 billion business just isn't their objective, and that's true in every sector. But also education, which has traditionally quite a social bent, Often it's not about kind of value maximization in terms of the investor, in terms of the entrepreneur. They have other goals, and it's important to recognize that. So that's the first thing. The second thing is, I think Australian businesses generally stack up pretty well in terms of quality of product versus their international counterparts. I'd say Australia and, say, Scandinavia, I guess, have a reputation as having good quality products. It's very rare, though, that you have a truly differentiating technology currently, in the same way that some, say, consumer goods sectors would have, or say some financial sectors would have. A lot of innovation in education is around business model innovation, and in about kind of finding a specific underserved niche that you can target and grow in. So, for example, like a Cloud Guru is a good example of a great training business that is focused on a very, very underserved global niche, and they have become a global leader in that space. And they will grow significantly in that space because they have an audience that wants to be trained. They can't get good training. Cloud Guru does it fantastically well, and those learners exist around the world. So you often can find great businesses coming out of Australia that either target an underserved niche or have great business model innovation. And I'd say, Go1's a great example of something that it has great business model innovation. Like they target an underserved niche. They don't have a particularly, I guess you could argue, innovative product, but they have absolutely nailed their execution, and that's critical.
And when you're looking at an investment opportunity, say, Tim, or maybe advising someone how to position their own business, do you think they should be chasing those niches, or do you think that potentially limits their ability to scale, particularly if there's a particular regulatory environment here in Australia or something along those lines that they're aiming to work to that perhaps doesn't apply overseas?
Yeah, I mean, we've seen definitely changes in regulation in Australia that have created booms and busts within the edtech space. I mean, you only need to look at the vocational training space and the rorting that happened there in the mid to late 2010s. That it's a good example of regulation creating favourable conditions for private providers coming in, not having their outcomes sufficiently tested, and them chasing dollars. And I guess you do get these situations where poorly formed regulation attracts bad actors, and that's the same in any space, and it's particularly true in education. However, I guess when we were making in businesses that had a heavy exposure to government funding or a heavy regulatory environment could change.
Yeah.
Sorry, Tim, you were dropping it out there a bit.
Apologies. I was just saying we didn't make any investments in businesses that had pure exposure to government funding. Like, it was really important that, I guess, a business could survive on their own feet and that they could attract students that were willing to pay for the products themselves. I think, again, if you look at the product businesses in Australia that have done very, very well internationally, they haven't had a over-reliance on government funding in their Australian operations. And I think that's important to understand and seek out when you're looking to make investment decisions.
And does that go with the general focus of the business? They're sort of lifting their eyes a bit out of Australia to the region or the world.
Yeah, I mean, when we were at Navitas, we obviously had a strategic investment lens. So the business had to make sense to our wider portfolio, and that meant that we passed up on some great businesses that were going to do very well, but ultimately weren't strategically relevant to us. But we always needed them to have an international goal and an international, and we also needed the CEO and founder to want to have that international growth mindset, and that didn't exist in every founder coming out of Australia. But I'd argue it doesn't exist in every edtech founder globally. In order for a business to become internationally relevant, you have to understand the international markets and start to make international plays, or at least international networks, I'd say, relatively early. That's easier to do in some sectors where you can directly access students than others where you have to work through an intermediary like a university, for example.
Thanks, Tim. Genevieve, I was wondering if you had any reflections on that, and particularly around sort of minimum investment sizes that the different categories of capital investors are looking at, particularly when they're looking at different businesses, say, in this sector. There's
a couple of things that maybe just to add to what Tim was talking about. This is where EdTech can be more than just B2C provider. It can be a B2B provider, so, basically servicing, the education institutions as well. And why I say that, there's different lenses you can look at EdTech under. And so one of the companies that we actually just invested in at Colinton is a company called Clear Dynamics. Now, it's actually an ERP software business, but one of the sectors it is looking at is education. But really where it comes into its own is, where when you mention ERP, most people run in fear because they think of large dollars and a long time to implement. But really why we invested in Clear Dynamics, which is a Victorian-based business, by the way, is because it does something quite unique in that it can actually deliver ERP software at speed. And when I say at speed, it can get actually proof of concept up and running within weeks, not months. And through the way its tech stack works, which is using really metadata married with AI over partially built modules, can actually stand up, ERP software pretty quickly. And I think what's lacking actually in the higher ed space is investment into how the student journey goes through in a much more seamless way. And certainly, Western Sydney U, we made some investments in that, and other areas to make the student journey way more seamless and more easy to get through from. And I think, Clear Dynamics has potential to do that in the education space in Australia, just as it does in other verticals. But why I mention that is more because I think when we think about education technology, it doesn't just have to be delivery of education content or delivery of education. It's everything in the ecosystem around a business that you call education. And so that's kind of an interesting thing to talk about because there's many, things to solve in that space, I guess, from a point. But coming back to your thing about ticket sizes, so, ticket sizes for angel investing, angel investors can range from $50,000 to, $250,000 per ticket. If you're talking about venture capital funds, most venture capital funds will be in the $500,000 to say $3 million ticket sizes. Growth private equity can sort of be $5 million to $25 million. And then when you get into, more regular PE, it can be $25 million tickets and above. So that gives you that was the question you asked me, but how does that apply here in this space in Australia? Well, there's a number of different scenarios and examples you can give, but, again, for the audience on the phone, if you're just starting up with an idea, your first raising is typically friends and family, and they're giving you small tickets. And if you're a little bit bigger than that, you might be able to take that to a venture capital provider and you might club that deal. Clubbing it means you get many providers coming together to give you that funding. But generally you start out with family and friends first round, and then the second round could be another family and friends, and then you really get into more of the professional investor space. So that's kind of third round of funding.
Yeah, and you want to maybe just quickly touch on the size of ownership stakes that investors are looking at each of those sort of levels, and how that affects a founder, for example, after the family and friends round and those sorts of things.
Yeah, well, look, it's always it can be contentious. It doesn't have to be, but certainly until you get into the larger capital raisings, the founder is in control. In an ordinary equity sense, that means when I say control, they still maintain 50% of the ordinary equity or more. When you get into the larger rounds, and that's when you get into sort of 25, 50 million, 75 million, 100 million rounds, that's probably when the founder is dropping down below the 50% control. So anything before that, typically they're keeping control if they're valuing it correctly, if I could put it that way. Having said that, there are many different forms of the way that funding can come in. And, I don't really want to confuse it too much on the phone call, but, essentially where you sit in the capital stack is really a lot dependent on how much momentum the capital raising and how much of an interest the capital raising is to those investors. So if it's a well sought after deal, you will be able to push the investor down to ordinary equity. If it's not a well sought after deal and you're sort of fresh in your rounds, the money will come in higher up the capital stack. What I mean by that is it will come in as at least preference equity or even a comm note or even quasi debt. And that's to give a risk return profile to that investor that matches what they think is appropriate for the growth of that company at that point in time.
I'd say extending onto that, in the US, safe notes are becoming more relevant and more prevalent in EdTech, like with other sectors, less so in Australia. They're very founder friendly. So I guess if you do have a situation where a company is raising successfully off a safe note out of Australia, then it's usually a sign that they've either got large US investors involved or that they're a very, very good business and they're oversubscribed. C notes, you do see common equity, and then post Series A, it's just pure prefs. So, like I think we've got pretty similar structures to other countries, except for safes haven't become as relevant in Australia. I'd say valuations are typically lower in Australia than say in other countries, other major investment countries, such as say the US or the UK. I think that's probably consistent still. You do get exceptions. Some of the big raises recently have been led by your larger VCs, but traditionally Australian edtech companies have been raising valuations much lower than say their US counterparts of similar revenue.
Yeah, I've seen one safe note in the edtech sector the last few weeks, so it is starting to happen. Looking at it perhaps from the other side, Tim, what would you say that a founder or an emerging business should be looking for in an investor?
I guess there's different types of investors. So like you just have to understand the motivations of the investor, number one. So if you have a strategic investor, let's say we've just closed a round and there's a strategic investor that's invested, it's like, what is the relationship between that corporate VC and the parent? Like, are they there to identify opportunities for the parent to acquire later on, or are they, kept at an arm's length? I guess what is the investment strategy of that strategic investor? If they're a VC, it's kind of like, where are they in the fund life cycle? What's their mandate? Are they investing heavily in your space, or are you their sole bet in that sector? Are they education specific, in which case they open up a network to you, or are they multi-sector, in which case that they might be able to provide in expertise in other kind of complementary areas? So if you're an AI business in education, they bring an AI business in finance and you'll be able to learn from them. So I think getting a good understanding of what the investment mandate is, who the investment lead is, because ultimately if they're going to be leading around, they'll probably sit on your board and they'll have a fair degree of control moving forward. I'd say also understanding the differences in motivation between, say, a VC and a private equity company is really important. So private equity depends on the type of PE fund, but they will often make their money by putting debt into the business. And obviously that has implications on the kind of growth strategy that you can pursue, versus a VC, which tends to kind of sit back a little bit more and expect you to run at a loss for longer. But I would say, like, understanding the difference between VC, PE, the pre-IPO funds, which will be expecting you to take a public position on the markets in within a couple of years of them investing. Those are all really important kind of like foundational understandings that you build. And then once you have that, it's about getting really clear on who the manager is, because they'll ultimately become a board member. And then the fund, what's their mandate, where are they in the fund life cycle, etc.
Thanks. Sorry,
maybe just to add to what Tim said, if you're raising money, when you go and talk to investors, do spend time asking the investor what their mandate is, what segment they're in, how long their hold period is for, and what the typical returns they're asking for. You as a company raising capital are absolutely entitled to ask that, and you should ask that. And that way, I think it takes some of the mystery out of the capital raising. So, just as you're sharing about your need for money, you should also ask the investor, what are they looking for? And because really it is a bit of a journey of discovery to understand how, you marry up those needs for both people. So don't be afraid to ask is probably what I would say to you, because, lots of people call, the finance industry can use lots of vernacular and lots of different words, and it can be super confusing, but seriously, just ask, and it's a totally legitimate question to ask what that mandate is that the investor is looking for.
I'd say one other thing, because it's particularly relevant for the people on this panel. Somebody very wise once told me that when a strategic investor, makes proposals about how they're going to grow their business, it's important to, ask them to express that in writing rather than just purely have it in conversational terms. Like, the principle is that investors invest in you because they think you're going to grow. Certain investors have the potential to help you to grow. So, follow up on that and make sure that that's, you can never lock it in blood, but the simpler thing is you can get it down in writing.
Yeah, we've got a few minutes left. I did want to address some of the questions. And I suppose one of the themes is what would you say is sort of a particular factor of key importance to you when you're looking at a business, and that potentially businesses in the education technology sector, but perhaps more broadly, commonly get wrong?
Do you want me to have a go
first? Yeah, you go first.
I think what a lot of people miss is how to explain their business succinctly. So one of the things that, I think if you're somebody raising money and you struggle to explain what your business does, you should try and keep it to 10 minutes. In the first 10 minutes, when you meet a capital provider or potential capital provider, you really need to really succinctly explain what your business does, why it's unique, and what your business model and how it operates works. If you can't do that in 10 minutes, you often will lose the capital provider's attention. You can always come back and fill in the whole story about how you founded the business, your personal journey, some of the things that make, very real for you individually, but initially just explain what you're trying to do very, very well. And that's actually half the battle, because then you'll have somebody who's engaged and wants to learn more if you can do that very succinctly.
Tim?
Yeah, the best businesses I've seen have been able to describe themselves super succinctly within 5 slides, and that's really all that an early stage investor is looking for, is for large addressable market opportunity. They're fundamentally making a bet on the people, and when you have a really, really effective founder team that talks in lockstep and has a very clear vision for the future, then that's half the battle. I would say one thing, because I have seen it in Australia, is the role of advisors, especially in early stage businesses. I tend to find that some startups can use them as a crutch, and you're not going to ever incentivize somebody enough to describe your business in a way that accesses capital. Like I would always view it as, is this leadership team backable? And part of that is, are they able to understand their business well enough, and are they able to articulate it in a way that's going to attract capital? And I think if you become over reliant on advisors early in your life, you don't pick up the skills required to have these conversations at critical points in time. So I would just add that as a word of caution, where I've seen some great businesses outsource thinking and outsource network building to a third party, and that is, I think, pretty dangerous. So I would just raise that as a point of caution for organizations.
I think we're coming up right on time, but perhaps to end on a positive, Genevieve, what would, the best pitch, if you like, or the best compelling offer you've seen? What are the factors of that? What makes it really great?
Well, I think undoubtedly the founder knows their craft. So the founder is actually someone who has an intimate knowledge of what they're trying to achieve. So they absolutely know the craft and they know the strategy. They have somewhere where they want to go. It's not necessarily vision so much, but they have a goal and they have, they really know where they're heading with it. It's delightful when you meet somebody who's very determined, clear about what they want to do. That's actually, so that comes fundamentally down to the person. You marry that up with very good tech. And when I say very good tech, the latest technology that doesn't require, a lot of development and, a whole bunch of arms and legs to support the growth and model, then that's a really, really interesting thesis. And then the only other thing that I'll say is, you can actually clearly see how they can scale it. And so what I mean by scale is, it can be that they need more marketing arms and legs to enable them to access more industry verticals or more, customers of a certain type or whatever. And so that clearly is one of the things that I look for as scalability as well.
Well, thank you very much. I might take this opportunity to once again thank you, Genevieve and Tim, for your really valuable insights today, and pass back to you, Sophia.
Thank you. Thank you, Genevieve and Robert and Tim, who's now left us. But it was really useful for the EdTech audience, I think, to provide some background on what I think a capital provider really is expecting, and also a bit about the reputation of Australian EdTechs overseas. So thank you so much.
Thank you, everyone. Thanks for your time. Bye.
So we're nearing the close of the summit, and in this next session, we will be joined by a very experienced investment panel to share some of their insights and expertise. I would like to introduce you to Patrick Brothers, who will moderate this panel. Patrick co-founded Holon IQ, a global market intelligence platform for education. He is a member of the World Economic Forum and the B20 Education and Employment Task Force. He's passionate about transforming the way the world learns. Over to you, Patrick.
Hi, Sophia. Thank you so much. Like you said, really exciting panel ahead of us. I'm going to make some quick introductions as soon as I see my colleagues join us. Perfect. So on screen, and we really do have a wonderful panel to dig deep into an investor's perspective here. Let me make some really quick introductions before handing over. So firstly, Karen Bohm. Karen is a founder and partner at Pangea Impact Investments. Karen, thanks for joining us this afternoon. Cheyne Tan. Cheyne's an operating partner at Potentia, and Srdjan Dangjubic, who's a partner at 5V Capital. What's wonderful about the panel we have this afternoon is all of these folks have very specific expertise that relates to investing, have experience in investment, but also have experience in other sectors and spaces too, to be able to bring some comparable insights to the space too. Look, let me make a start. Karen, can I start with you? And can you just share a little bit more about Pangea, and then share a little bit about how Pangea is thinking or acting in relation to education and education technology?
Sure. Thanks, Patrick. Pangea Impact Investments was started by my husband and myself about 5 years ago. And we make direct equity investments using our own funds and our own time into businesses that primarily focus on education, and we also focus on health. So most of our opportunities sort of come through the Impact Investing Network. It's a pretty sort of tight bunch in Australia. And in terms of my professional background, prior to starting Pangea, I was practiced in law, primarily employment and industrial law. And I did that for about 10 years in Sydney and in London. And that's just a very useful background to have, and also feeds in well to our focus on education and really people and training and skills. The other half of Pangea, Anthony, comes from an extensive background in education businesses. So most notably, he co-founded Think Education Group and also Open Colleges Australia. So he has been through the high growth digital business, and so we bring obviously capital, but also we're not passive investors. So our approach to looking at education businesses in Australia is how can we support the entrepreneur beyond money, and so we like to be active in the space and share some of the lessons we learnt on our journeys as operators.
Awesome, so impressive. Cheyne, can you share a little bit more about Potentia and your background as well? Again, super relevant, super interesting.
Sure. Thanks, Patrick. So Potentia is a tech and tech-only focused private equity fund. We're based in Sydney. Our focus is predominantly ANZ and investing in ANZ-based companies with corridors into sort of Asia and beyond. We have a sort of a bent towards education in that we have 2 of our 5 portfolio have a strong education presence. The 2 in our portfolio that have an education presence is a company called the Education Horizons Group, which owns a number of education products, including Synergetic and Sector, which is a student management system and a learning management system in the K-12 space. And the other education business where we have in our portfolio is a company called Comply Space. And Comply Space is a compliance software business with a strong footprint in the, again, Australian K-12 space. So I come to the education. I come to education investing with sort of 3 different perspectives, I'd say. So, firstly, clearly the work I do at Potentia, and as an operating partner, I spend most of my time with our portfolio, helping them to sort of, unlock the value that they see and the opportunity they see in their businesses. And secondly, I spent some time on the advisory board of a early stage investor in Europe called Emerge Ventures. Emerge is, one of the largest education investors in Europe at the very, very early stage. And lastly, I have a sort of a background as an operator myself. I built my own education tech business back in 2010, a company called Blickbook, which was an engagement analytics platform within the higher education space, which was later acquired by a company called Civitas Learning, which is a data analytics platform, in the higher education space. And I then ran Civitas's international business for a couple of years. So that's me.
So cool. Thanks, Cheyne. And Srdjan, 5V Capital and some of the investments you've made. Love to learn a little bit more.
Sure. So we are a Sydney-based, Australian-New Zealand-focused growth capital fund. So we're focused on backing growing businesses and helping both through the provision of capital and being an active shareholder. So I guess a combination of what you've heard from the previous 2 presenters as well. In terms of EdTech, I guess much like everyone who'd be at this conference and participating, we're not rocket scientists, but we've seen the social impact education and then education technologies is had at a global level as one point, but equally as investors, we've seen an opportunity to invest in businesses that would ultimately see significant value creation over time. And so in that context, we're invested in a couple of relevant businesses. One is a business called Education Perfect, which is a secondary schools focused knowledge management platform that now operates globally, used by about 1 million students on a daily basis. And the other business that's relevant is a business called Totara Learning, which is a corporate enterprise focused learning management system. So it's a technology platform that's used again at a global level. Interestingly enough, both of those businesses actually have come out of New Zealand, which is no more than an observation, but I guess for me is just probably a reflection of the ability to create globally significant and globally scalable businesses from really anywhere in the world. And so that's sort of the summary in terms of EdTech. And the broader, to Patrick's question, we've got a broader investment portfolio that encompasses everything from those 2 businesses that I've mentioned to a number of BPO businesses, financial services businesses, retail, and so on. And so I guess we do look at EdTech in the context of a broader investment universe, but it's been an area of focus, and we've met a large number of businesses over a number of years now.
Cool. Can I ask the 3 of you, and please jump in rather than feeling that we have to go turn by turn, but like as the three of you look at the Australian edtech landscape, what do you see, and how do you view the Australian landscape with respect to questions like are they unique, are they scalable, are they thinking global, or is there something locally that's special about them? And I think, Srdjan, to your point, let's kind of bring NZ in for that piece as well. But really broadly, as you're in your investment committee talking about the Australian edtech landscape, how are you viewing it? What are the things that excite you, and some of the challenges that you contemplate as well?
Sure. Well, I might jump in. Look, I think the things that excite us, I guess, maybe a little bit cliche, in the sense that we see a huge market, a huge opportunity, a huge ability to make a difference. And so I think there's sort of some of the very high level comments, but I think the more relevant piece about ANZ is we've got an incredibly powerful brand from an education perspective more generally, not just edtech, but education generally. And I think as a consequence of that, we've seen a number of businesses that have reached sort of global scale, having started in Australia and New Zealand for that matter. And so I think there's a really strong platform in terms of brand, in terms of capability, that ultimately a number of businesses have been able to leverage, and a number of businesses should be able to leverage into the future to create globally relevant and globally scalable products. And we've seen that. I think we continue to see it. And that's probably what excites us the most, is the ability to back a business wherever it might be, whether it's Sydney, Melbourne, anywhere in Australia or New Zealand for that matter, but actually play into a global marketplace. I think that the other piece is, we're dealing with an incredibly dynamic space, and we thought it was dynamic 12 months ago. And if anything, over the last 6 months, that has only accelerated for I guess, obvious reasons, and we've seen a huge increase in awareness, a huge increase in demand. And I guess maybe some of the frustrations we've had in terms of the adoption of edtech in various institutions, that's accelerated. And so almost now, the businesses that we've been talking to or invested in, we're dealing with the opposite problem, which is, how do you deal with this influx of demand, which is a real positive. And so I think, that's the other, in quite a sort of I guess, an unfortunate global scenario. The one positive is, awareness has increased, adoption has increased, and that's probably an exciting phase for us, because we think we should be able to capitalize on that even more aggressively in the coming years.
Karen, Cheyne?
Yeah. Oh, sorry, Cheyne.
You go ahead. That's right.
I was just going to add, we share the same sort of optimism. COVID has placed tremendous pressures on, young businesses, but it's also opened up tremendous opportunity. We've had a couple of businesses, for example, that have had to pivot to completely online offerings, and that was a shift that was underway anyway, and it's just accelerated that transition. And I think education is typically counter-cyclical, so there are those opportunities for good businesses to get out there, and Australia is a great market to get in and test. And education is universal, and the benefits are universal, and certainly you can roll it out into adjacent markets, into Asia or further afield. Every business we kind of meet seems to point to sort of the US market, but we try and encourage them to look a little closer to home sometimes. Our personal investment strategy is that we like to look for businesses that are solving education solutions here domestically first. But if they're growing and they're scaling and they're having impact, then it should be able to grow well beyond Australia's shores.
Perfect.
So Patrick, the only thing I'd add to sort of those two comments is, I think what's perhaps somewhat unique about the Australian edtech sector is this sort of odd duality that a lot of edtech players face here. So the challenge of the Australian market is really a challenge of, in my opinion, of small numbers. And often, you find that that's manifested in a lot of really small and often subscale applications or solutions that try to fight out for what is on a global level, a relatively small market, which is really hard. Sort of getting 10% of any market is hard, but 10% of a smaller market, leaves you with, a small number. So I guess the challenge is, in Australia, you'll often see, these edtech players fight it out locally, but the ones that really manage to sort of break out and scale internationally are the ones that we as a fund particularly find exciting. And I think, as Karen mentioned, you do see a lot of the Australian edtech players moving into sort of Asia and the Middle East. And I would agree with Karen. I think that the American market is unique in itself. It's sort of the needs and the use cases in the US is very different to the rest of the world. And the last thing I'd say that I think is a real advantage for Australian edtech players, as Srdjan mentioned, is that sort of brand that the Australian edtech players can leverage. You'll find in a lot of the Middle East and a lot of Asia, the curriculum is often based off of the sort of British or indeed the Australian curriculum, and sort of coming out of Australia has a lot of provides a lot of advantage to Australian players.
Okay, we've got some questions rolling in, and they're lining up like beautifully with some of the themes we discussed in our prep. So let me hit a couple of them now. Perhaps one of those questions you're just not going to go past in an EdTech panel touches on, how much of EdTech is impact versus not impact, as characterized by, say, the standard person's definition, but also the tension, or maybe not the tension, between investing in education for commercial returns versus for those impact ROIs. Who wants to kind of tackle this one first? Karen, do you want to have a go? Pangea Impact Investment sounds like a great candidate to start.
Sure. Well, our approach when we look at an investment is, first of all, it has to pass our impact hypothesis. So we actually go very deep on do we think that there's a problem here that is going to be solved and solved at scale, and do the founders really, is that sort of their true north? Is that why they're really chasing this solution? So, and we tend to find some impact investors talk about having mission lock and putting the impact hypothesis, actually into the constitution, for example, of an organisation to try and tie entrepreneurs to the impact. We actually find that really good impact education businesses are naturally sort of intertwined. The social impact and the financial growth should be intertwined and sort of just self-support. Now, and Anthony and I sort of call out if there is a tension between the impact and the financial objectives. We call that out early on, and we put together a bit of a pre-investment document, and we share that with the founders, and we work through that to determine whether or not this is going to be a happy marriage in terms of how we view the business and how the founders view the business. So, for example, natural tension is, you're going to raise the price on your product, and how's that going to have an impact on accessibility in the market, for example. And so you can work through all of those tensions. It's so in our experience, if the central philosophy is, if it's a great business model and it's growing, the impact is growing, and then the business is thriving, and therefore it's not dependent on grants or philanthropy, and so it should all marry up.
Nice. Srdjan, you've got a really broad portfolio of different industries. Like, how do you guys think about this?
Look, I think from our perspective, we are investors at that point earlier, and so we look at investments and look for a financial return, but equally a number of other criteria, and I think the other criteria are becoming increasingly more sophisticated, around various policies in terms of modern slavery and so on and so forth. But I think the interesting thing for us from an education perspective or an EdTech perspective is, these businesses are the most obvious businesses that have, I think, the biggest social impact out of our portfolio. Now, we love all our investments equally, much like you love all your children equally. But I think that from a personal perspective, what's exciting is every time we have a board meeting, every time we have a conversation on Education Perfect, for example, we know the decisions that are made there are hopefully to ultimately the benefit of millions of students who've used that platform historically and who are going to continue to use it. And so there's certainly a satisfaction within that, we have incredibly positive feedback from our investor base and our other stakeholders around involvement in a business like that. And so I think that's a layer of positivity that I think just reinforces, I guess, ultimately the attractiveness of the sector overall.
Cheyne, you've got some awesome, sitting on the board of Emerge and inside these businesses are now investing. What's your take? I think you're on. Yeah, grab that. Yeah.
Sorry. Quite simply, Patrick, I don't think they're mutually exclusive sort of issues. The reality is, I think it would be a misnomer to sort of focus purely on commercial outcomes, and I think you'll have a hard time achieving them if you are not having a impact on educational outcomes at the same time. Potentia are not a impact investor per se. Having said that, we think carefully about the impact that the money we put to work is having. The money we are putting to work, it represents savings of hardworking Australians from the super funds that are our investors. And so, having the opportunity to invest in a sector like education is really meaningful. As Srdjan mentioned, there is a sort of I think both operators, investors, and users are involved in this sector because there is this sort of additional outcome that has a true social impact. So having said all of that, I do believe that the work we do is important, and I think it's important because of the impact it has.
Great. Look, I want to touch on a quick question too with respect to kind of EdTech specialist investors. Over in the US, I think we just saw, Al Ventures raised like $580 million EdTech fund. They've got $1.5 billion funds under management. Meanwhile, there's a lot of investors who perhaps wouldn't have looked at EdTech before who are coming in because they see the dynamics. They don't have the expertise or the experience that the three of you have. But how do you think, again, about like a specialist EdTech investor who maybe is doing efficacy screening versus a general investor who's perhaps as equally interested in the impact side, but without as much experience in EdTech? How does that weigh on your thinking? Is that important or distraction?
Look, Patrick, I'll just quickly jump in there on 2 points. One is I do think the education sector, much like other regulated, heavily regulated sectors, is somewhat unique. There are some factors about the sector that are unique to regulated spaces. And so what I would say is the second. So therefore, I think having some sort of capability, insight, interest, focus on the sector is valuable and important in order to be sort of effective. Having said all of that, if I sort of point to my experience with Emerge Ventures, and as I say, I was only on their sort of higher education advisory side when Jan and Nick set up Emerge, probably back in 2010, about 10 years ago. I think it'd be fair to say there was sort of questions and doubts as to whether or not the sector was big enough to warrant a dedicated EdTech at the time incubator, early stage investor. And they were focused only on Europe, and they were asking companies to move to London to launch their education businesses. And I think I would actually argue that sort of 10 years on, what has enabled them to do that is that they really have a pan-European focus, and that enables them to have a real European scale and at the same time global scale. They were getting Australian EdTech companies go over to be part of that program. So I would say from a dedicated EdTech investment perspective, there aren't that many dedicated EdTech funds, and that's because, it's sort of the law of small numbers, and the problem of unit economics in education is really difficult.
Interesting. I'm gonna keep us moving because we've got lots of questions here. I'm just going to seed a thought with the three of you about where you think EdTech might be 5 years from now. But I'm going to shift in the meantime while the cogs are turning. We've got a lot of questions which are kind of seeking your thoughts on. We've talked a lot about EdTech. Now let's drill and double click inside EdTech. Are there specific parts of education or education technology that you see as quite attractive at the moment, or more attractive than they may have been? And maybe on the converse, are there parts that you think are less so than perhaps they were as a consequence of COVID, but just the ongoing evolution of the space? If you double click into EdTech, what are you guys talking about? What's interesting?
Look, Patrick, sorry, go ahead, Karen.
That's okay, Shane.
Look, very quickly, I'd say I think that we're in K-12, but I actually think that the professional services, professional education space, is really compelling. Sort of corporate education and whatnot. The sort of what makes that sector interesting is that and what makes education challenging is that the sort of purchasing process and the sort of decision-making process is much more commercial obviously in the professional education space, and for that same reason, the other parts of the EdTech sector is a challenge. So yeah.
Okay.
I was just going to add that the area that really interests us at the moment is sort of the unaccredited training for adults and filling those gaps. I think we've moved into a space where people need to reskill. In their 30s, in their 40s, and educational providers have been too slow and are too slow in that space. And so there's some really exciting solutions coming into that space that mean that people are invested in rather than made redundant and those skills lost. So I like that whole hypothesis of taking people on that journey, whether it's the impact of COVID, whether it's automation or AI generally. We've recently just completed an investment into Faethm, which is very exciting, and that's the application of AI to sort of predict how all of those big shifts are going to impact on current and future workforces. And I really think that's what we need to do in terms of making the most of our human talent, which at the end of the day, that's the core of everyone's competitiveness is tapping into that talent and investing in it rather than making people redundant.
Fascinating. Srdjan, what drove you guys to make the investments you did, and what are you on the lookout for at the moment?
So I'd take the second part first. I'd sort of echo Karen's comments, actually. If there is one aspect that excites us at the moment, and we're trying to identify opportunities, would be the unaccredited, unregulated, depending on how you use the definition, sort of post-secondary education. So, the one aspect is definitely careers are becoming more dynamic. People need to reskill and so on. I think the other element that we've been focused on is, with remote learning, some of the value propositions, I guess, of the established institutions come into question, in terms of the traditional attending universities, be they in Australia or some of the, Ivy League colleges and universities in the US. The value proposition that once existed and really people focused on and paid huge premiums to access start getting disrupted. And so I think the combination of those two factors has got us thinking a lot about, what are people seeking from education? Are they seeking employment? Are they seeking fulfillment? Maybe both at the same time. And equally, can other sort of non-institutional organizations, so startups, really provide those outcomes? And so I think it's not necessarily a new theme per se, but definitely it's accelerated from our perspective over the last 6 or 12 months. And that's where we're looking at the moment. In terms of the first part of your question, Patrick, and why did we invest? As ever, it's a combination of factors, and I've seen some of the questions come up in terms of what's critical, or why do you not invest in certain companies and so on. I think maybe two or three to call out. And I assume you would have heard of them. And I think if I heard Genevieve at the back end of her presentation earlier prior to this one, ultimately, it comes down to people and the founders and the owners. It really does. You might have the greatest product in the background, the greatest business idea, but if we don't feel that we have the alignment with the founder, if we don't feel that they're a founder we can work with and assist and partner with, and ultimately, go on a what's probably a 3, 5, 6, 7 year journey together, then that's an absolute no-go. And so I think, going back to the investments we've made, it has been the founder and the team that have ultimately been that sort of almost the absolute yes-no decision point. Beyond that, I guess from our perspective, we saw in both businesses that we've invested in some incredible product market fit, amazing product feedback, and at differing stages of those businesses. But in relation to education, Perfect, which is a secondary school focused platform, incredible user feedback, both teachers and students, and a platform that was evolving very quickly. It was disruptive, and all of those things. But ultimately, the key piece for us was, going and speaking to teachers, speaking to school principals who are huge advocates of what the business was doing. And so all of a sudden, when you've got that product and market acceptance, it makes the rest of the sort of the growth story and the plan and the investment required a lot easier to believe. And then the third piece, we quite like the global aspect and the global aspirations of the businesses we invested in. And so, that's been a focus. So really, to the earlier point, if you can prove yourself in Australia or NZ, that's incredibly valuable. But it really ought to put a business in good stead in terms of approaching markets offshore. And differing businesses have attacked different markets, whether it's Asia Pac, Middle East, Europe, or the US. From a personal perspective, for what it's worth, I harbour some of the same reservations that you've heard before around the US market. It's a huge market at a high level. It's incredibly attractive. It's an incredibly complicated market and very difficult to access. And so for the businesses that we are invested in, actually the focus has been more into Asia, Middle East and Europe. And we'll see how that plays out.
Interesting. Cheyne, just for a second, one of the thematics that I've heard a lot lately is B2C versus B2B, and also just the thematic that's come up on this conversation around unaccredited adult, skilling, which there seems to be a real fuzzy line between HR tech and ed tech happening as well. Like, what are you seeing? B2C, B2C versus some of that stuff at the work end feels like it's more B2B, but do you make a big distinction between B2C and B2B? Is there a preference? How are you thinking about it?
So as a fund, we only invest in B2B businesses, and typically, actually, a lot of our thesis is centered around SaaS businesses. Part of the reason for that is sort of the obvious answers you'll always hear: predictable revenues, the ability to drive off long-term growth. And actually for education, what really matters is sort of the ability to scale off referenceability, which comes with sort of a lot of benefit. A lot of that benefit comes with SaaS businesses. Having said all of that, when I sort of built my initial business, I actually started the business with a sort of B2C bent. We quickly moved into a sort of P2B mode. And the only thing I'd sort of say about that is, going back 10 years now, B2C in education is sort of really difficult. And at the time, we were focused on B2C in education in the higher ed space, and sort of trying to figure out where the pain points were for students sort of in the 18 to 22-year-old range, and trying to figure out what the buying signals were for students or parents in that range was really challenging. And so, I think that's why you probably see very few B2C businesses scale, particularly in the higher ed space. You probably do see, to be fair, more in the sort of younger age space.
Karen, are you seeing anything, or is it a conversation happening inside Pangea?
Yeah, I mean, our businesses sort of have a mix of B2C and B2B, and one's selling into both. Academy XI is running training, direct to students, and then also offering training to companies and rolling it out that way. So it's not really a filter for us. For us, it's more about just who's the market and how are we accessing it. Our biggest sort of pain point, I guess, when you're looking at sort of primary and secondary schools in Australia is this structural kind of impediment to how sales happen in Australia. And it's, this decentralisation, which has empowered principals to make decisions, has meant that selling into schools is difficult. And it's difficult for principals too, because there's this concept of a system-wide sale is great in theory. It rarely happens in practice. And then the principal's left with sort of all these great ideas sort of knocking at his or her door. And so it's quite inefficient and it's frustrating from that perspective. We do see a lot of really good ideas, but selling into schools in Australia is a challenge.
Okay. Hey, I'm going to shift. We've got about 10 minutes to go to this kind of forward-looking perspective, and love to hear where you think education and edtech might head. And I know that's an enormous question, but what if it's just a thread, but or a thesis, but what's one of those scenarios or assumptions or something around how you think education will play out that's driving what you're looking at and how you're thinking about it? Do you have a specific assumption around how it might play out or how you hope it plays out? Any takers?
Who wants to jump in there? I'll have a bit of a stab. Look, I think, 5 years ago, a lot of the tech was all about replacing the teacher. And I think 5 years from now, and certainly COVID has reached everyone in quite a personal way, people who are parents of children, just how pivotal and central the role of the teacher is. So I think you're going to see the tech that wins, certainly when we're talking about children and secondary students, is technology that makes a teacher more efficient and makes a teacher more impactful. And the key to their success is going to be evidence of impact, because there is so much out there and it's very front and centre now. People need to know how much does it turn the dial, how does it turn the dial, and how can you show that to me? And so it's no longer something that's just nice to have. Purchases are made on the basis of evidence of impact, and so I think that's that has to be succeeding, and that's what we try and invest behind.
Nice. Cheyne, what are you thinking?
Yeah, look, the only two very quick things I'd add, I agree wholeheartedly with Karen. I think the two thematics that have yet to prove themselves out, and in fact, I think the sector is moving towards is one centered around sort of the role of data in education. I think a lot of players have had a go at trying to solve this over time, and I don't think we're quite there yet. And two, as sort of Karen articulated, I do think that schools, providers, institutions will increasingly have to quantify the sort of the impact of their work, and they will be judged on that basis. And you're seeing that in parts of Europe with the sort of government reforming the way in which universities are remunerated through the teaching excellence framework. You're seeing that the increasing emergence of not emergence, but the role of the sort of the NAPLAN type programs in Australia. So I think that'll become even more prevalent over time.
Interesting. Srdjan, any thoughts?
Not that I can add. Really, efficacy is kind of the name of the game at the moment. Users are more sophisticated, both teachers, principals, governments, universities, whoever it might be, and efficacy is becoming a real focus. That there is the landscape is competitive, as we all know. There's lots of different solutions for problems that might be similar. And so proving that you're delivering outcomes and driving efficacy, improved engagement is incredibly important. And I just see that accelerating, much like the rest of the team.
To save you and all of the young and old founders who are on the webinar at the moment, I'm going to ask you the age-old kind of one piece of advice question is that there are going to be tens and hundreds who will watch this and look to organizations such as the three of you represent, like if you were having a cup of coffee and I was the founder and said, what's your advice? Like, what should I be focusing on? What should I be doing? What should I not focus on in a time right now, in EdTech right now, in Australia? Please, give me some mentorship. What would you say, or what did you just say from the last cup of coffee you had with a founder, either in your portfolio or you were meeting with?
Why don't I have a go? It's kind of so many. If I can distill it into one, it's clarity of purpose, clarity of message, the company that people are trying to build and the problem they're trying to solve. And I think that is incredibly important, because there is a tendency, and I guess tendency that we've observed, that aspirations, as we've said, which we ultimately like at the right time to be a global business and solve a problem in one foul swoop. They're great aspirations to have in the background, but ultimately can, in our views, inhibit the sort of the building and the creation of a successful organisation over time. And education does have unique points we've touched on. Selling into Australian schools is incredibly difficult. And so, we've had lots of conversations with people whose view is, we're going to be in 1,000 schools at the end of the year, for example, or within 12 months or 18 months. And to me, that suggests maybe not understanding the problem and the challenge and ultimately what the company's trying to achieve and how it's trying to go about it. And so it's all about, quite often, and maybe it's unfair, and perhaps people who sit at the other side of the table, who are founders and owners, can perhaps find it unfair, but quite often you can form a very, very quick view about a person, a founder, a business, and their proposition. And so making sure you are really clear as to what you're trying to achieve, how you're trying to go about it, and that problem that you're trying to solve, and have the ability to articulate that. I think that gives people a much greater chance of attracting capital, the right investors who are going to be helpful, and ultimately help, achieve something that's not easy. It's incredibly difficult to bring and develop a successful product and a successful business. So
awesome. Cheyne?
Look, I almost hesitate to say I'm not sure I'd be able to pick out a single factor. So, look, I'd say the sort of 2 to 3 things I'd very quickly say about education tech businesses in particular are, I think the 3 areas I'd say is, being able to prove a repeatable acquisition engine is really hard in education. Education builds a lot off referenceability, and so once you get that wheel spinning, it becomes easier, but getting that wheel spinning is really hard. I think proving unit economics for education products is really difficult, particularly early on. And lastly, the age-old product market fit and product fit, being clear on the use case you're solving. So, clearly it depends on the stage of the business, but I think for education companies in particular, those 3, which is probably true for a lot of other sectors, are difficult and important to prove.
Fantastic. Karen?
I think the single biggest factor for me is to tell young entrepreneurs to fill the room with people who are smarter than them. Quite often, the entrepreneur is full of enthusiasm. They've taken it to a certain stage of development, but they actually don't know what a good one looks like. And whether that's surrounding yourself with some sort of advisory board, or you have, some trusted, sorry, my daughter's just printing in the background. I do apologise. I've got to multitask here. Now I've lost my train of thought. Yeah, so surround yourself with some grey hair and some experience, because I think that de-risks the execution piece for investors. So we love enthusiasm. We don't expect new entrepreneurs to have all the answers. And so I think understanding that you being coachable and you surrounding yourself with people who have other skill sets, and perhaps, stepping away from a product focus and understanding you're going to need a terrific salesperson, you're going to need a terrific marketing person. And that's been one of the biggest challenges for us, that young entrepreneurs try to, because they've sort of bootstrapped it and they've done it all, that sometimes making that leap to the next stage of letting go of some of that and hiring in the expertise to drive the next stage of their business is a difficult thing. So being coachable and surrounding yourself with other good people.
Awesome. Hey, thank you so much. I want to thank on behalf of everyone. Thank you so much, Karen, Cheyne and Srdjan. Awesome insights, wonderful contributions. Thank you so much for sharing all those thoughts with everyone today.
That was great. Thank you so much. It was great how you broke down how you actually work with founders and how exciting it is to actually participate in the sector. I think people don't often think about how beneficial it is to have that feeling that you're investing into social impact. So I think that's great. But an extra special thanks goes to our judges for the pitch competition. So Srdjan, Karen, and Cheyne will be staying on to participate and judge the companies that will be pitching soon. So now for a bit of fun. In our closing session of the inaugural Melbourne EdTech Summit, I'm pleased to welcome you to the Melbourne EdTech Summit pitch competition. In a few minutes, you will meet 4 of the most innovative EdTech startups from across Australia. Each company will have 3 minutes to pitch their idea to our panel of investors, who will then have a few minutes of time to ask questions. Following the pitches, our judges will deliberate, but you, our audience, will also get the chance to vote for your audience favorite in our poll question tool available on WorkSap. I will now invite our first 2 companies to pitch, and then our investors will have time to ask them some questions. Let's get started with Deval Nayak from Grandshake.
Hello, everyone. My name is Deval Nayak. I'm a founder and CEO of Grandshake and Grand Company. What Grandshake does is helps high school students figure out what's next before they complete school. Now, don't you wish you had Grandshake when you were in high school? Of course, there's a lot of pressure when we're at that stage of life, trying to figure out, finish school, trying to go to uni, or we go down the trade pathway. And there's a lot of pressure. So what we've done is we've created a turnkey solution that helps facilitate meaningful experiences for students who are seeking career education or work experiences or not fully engaged in study or employment. It's been a bit of a difficult journey since March due to the pandemic. A lot of employers are not able to provide these work experiences to students. So we were hit with a serious concern in our business model to continue, grow, or adapt. And since last 2.5 years, we've heard from everyone that we speak to. The mission that we're on resonates with most of the people. We've heard this repeatedly. I wish I had Grandshake when I was in school. So we have to forge through. We created a really fantastic, comprehensive solution. We moved straight into the virtual work experience space. We built a fantastic solution that offers those values to our students. And since then, we've created this fantastic value proposition that not only for students, but enables schools to build these industry pathways, but also for organizations, offers to build a authentic relationship and help grow their talent. How it works, it's quite simple. I can go through the mechanics of the platform, but the key thing here and the important thing here is that in April, we didn't have any solution, and now we have a fantastic solution, comprehensive solution that's embedded and is scalable. We run multiple virtual workplaces to enable these experiences for students. It's ultimately a scalable solution. We've embedded things like student mentorship. We've embedded the credential which students gain at the end of the program. As a student, they have a fantastic journey. I'm going to go through it very rapidly with you here, but it's an ultimate solution that provides them with a clarity in what they want to do, the career they want to pursue at the end of their school. And I'm really proud of it. been in the space for 2.5 years, and looking at April, I can tell you one thing: we didn't survive. We absolutely thrived. We have about another 24 program that we're building. We've launched the first one just over a month ago, and we've got this fantastic business model to capture our vision and mission and help us thrive to the next stage. As you can see right now, we're offering students a paid model. We want to move that to the free model. We're also exploring our business model through the school and the business end, which is just a hosting fee and a subscription model there. Over the 2.5 years, we've done quite a lot here in Queensland. We've been recognised in the market quite a bit. We ran a pilot with the Queensland Department of Agriculture and Fisheries last year, and we've done multiple things here in Queensland and formed a lot of partnership. Moving on towards the future, what we have is a really scalable model available that caters to the students who are looking for what's next. We're looking to find that passion or motivation, and we want to continue to do that through our mission to close this gap between education and real world. That's ultimately me. I'm sure you guys have a lot of questions around the business model, vision, mission, and what's next for us. Happy to answer that in the Q&A session.
Thanks so much. That was great.
No worries. I'll pass over to Claire Orange from Digii.
Hi, thanks for having me. I'm Claire Orange. I'm the founder and co-director of Digii Social. I'm a therapist with 27 years experience, and I know that a digital childhood is creating some unique global challenges. These are 200 beautiful children in my 20 Are You OK photo. Great day today. And that year in Australia, tragically twice as many children as that took their own lives. That's just one whole primary school of children gone. Suicide is the leading cause of childhood death here in Australia, and 1/4 of those are directly linked to cyberbullying. So cyberbullying is a huge issue, but this week's distressing TikTok situation clearly shows us exactly what we're up against in protecting our young people online. So Digii Social is our solution. It's a world-first immersive digital live training platform for Year 5 and 6 students. While children play on our social media with Training Wheels platform, they learn. On Digii Social, we use artificial intelligence to analyse and moderate children's interactions. Poor behaviour is educated through brief animated tutorials, and we also recognise and reward outstanding digital citizenship. And we extend that safety net through 50 animated tutorials, and all of these are aligned to the Australian National Curriculum. Now, to upskill the whole village, parents have their own platform with 50 brief video-based tutorials, and educators have access to a dashboard of metrics, on-demand professional learning, and the children's message board too. So Digii Social is offered as an annual school subscription at $35 a child, which includes their parents. Our research trial is running currently in 10 schools. That's 1,000 children surveyed and 500 children actively using the platform. And that number is only 10% of the number of schools who applied. Our research results will be available in Term 4 because having that evidence base is a critical success factor in the school market. There are 700,000 Year 5 and 6 students in Australia, and that total addressable market is $24.5 million per annum. Australia is our first target market, and we launched commercially in January 2021. We have a prestigious private Perth school here as our first paying customer. Across the world, there's 700 million Year 5 and 6 students in the UK, US and Canada, and we plan to enter those markets in 2022. We're an experienced and passionate family team, and we've grown the capability of our solution through a perfect mix of my industry knowledge, my husband's technical know-how, and our son's youthful creative vision. Doug and I, my husband, have worked together for many years driving the success of my small businesses. Currently, we're in the final phase of a competitive entry +8 accelerator program with a small seed investment. Our proud ambassador is Maggie Dent. We are dedicated and driven founders, and we welcome the opportunity to have conversations with educators, potential investors, and ongoing mentors on our mission, our vital mission to meet every child to life-saving and life-changing digital life education. Thank you.
Thanks so much, Claire. That was great. And now we will turn to our judging panel to ask some questions of our presenters.
I'll kick off. Claire, I love the mission of what you are trying to address here. Can I ask about your how you intend to sort of evidence your impact? You said that you're in a research trial in 10 schools in WA.
Yeah.
So you don't have the data points right now, but what is that going to look like in terms of how you're going to prove that the children's behaviour is changing?
Yeah, it's such an important consideration, Karen, especially in the education market. So the research trial now, we have a control group and we have an active experimental group. So that will give us our preliminary data. So this is all independent research, but obviously it's a really important consideration. So we are looking at pairing with industry leaders in paediatric research. We certainly have a lot of interest from universities that we're looking at pursuing to do long-term research on this. We also see this as a really viable option. If we can get a whole bunch of children on our platform using language and performing as they do on social media, that gives us so much data to work with that we don't currently actually have a window into. So we see it as a two-way opportunity. We are welcoming any research on our platform, but also we know that getting enough kids on there will give us a wealth of information about how to protect young people.
Hi, I just had a question to interrupt, but for Deval, how many students have been through the Grandshake program already?
So look, before March, we would have had just over 20,000 students through our platform, and that was mostly focused on the physical aspect of the work experience. But since March, things have obviously changed, and what we're trying to do is cater to a bit of both market. And since we launched our first program, the company called Cardno had over 24 students in the period of last 6 to 8 weeks that have gone through the 4-week program that we've launched, and we're building a few more programs in that space.
Great. And how many and what kinds of work experiences have students taken part in the Grandshake program?
Yeah, absolutely. Great question. Each of our programs are comprehensive to 4 weeks where we embed the industry education. So we bring in the aspect around what happens, what goes on in the industry, which sometimes takes 3 to 4 years once you enter a space as a new graduate. So 4 weeks experience where they go through that, they connect with the mentors, they also get understanding of what sort of other careers are available in the space, and then they get given a project. So, for example, the first program was launched through environmental scientists at Cardno. So we worked with the environmental scientists, looked at the day-to-day working of that job, and basically replicated that job into a project which students will go through and submit their assignments, and the senior environmental scientists will respond to them through a video system that we've set up where students submit their progression through the platform and get response through the video. So we're also trying to be mindful of our audience, which deals quite heavy on video, not just text and assignment there. So we're incorporating what they're used to at the same time. But overall, 4-week program, comprehensive program that they go through.
And Claire, what aspects of your program are teachers using most?
Sorry?
What aspects of your program are teachers using the most?
Well, I guess because it's just so newly launched, so we've been held up by COVID. We were supposed to be doing this in Term 2, but after the chat ate the bat, it kind of held up everything in our lives. So what we're finding with what teachers are accessing, They are looking at pathways for help seeking for children, which is not always very clear. So I work in the child suicide space as a first responder in schools. Quite often we find that teachers have missed the signs of digital distress. And certainly that's a lot of work I'm doing this week around that terrible TikTok situation. So when we're looking at children who could have seen content that's bigger than their years to hold, we know that teachers are accessing that content to help then grow their understanding of this new world that children are engaging in. And I think that data is just going to continue to grow. Obviously, we've got tech-savvy and non-tech-savvy people using our platform. So we've got some who are in that stage of just figuring it out and what all the functionality on the dashboard is. And then we've got some who are far more progressed and are using the higher end of it. So really looking at the moderations, the sorts of language children are using and what's happening on the platform at that functional level.
Thank you so much for sharing that. Well, now we'd like to invite our next pair of pitch presenters, starting off with Sarah Chamberlain from ReadyTeacher.
ReadyTeacher in 2015 to help managers like Peter from Universal English find relief teachers for online and face-to-face classes from as early as 6 a.m. A problem that takes up to half of Peter's work hours, costing his institution up to $45,000 per year, plus the cost of advertising. For teachers like Miriam, finding consistent work in a heavily casualised industry dependent on international student numbers is challenging. Peter now has ReadyTeacher's freelancer platform to instantly recruit specialist teachers for both online and face-to-face delivery with easy payment. With Miriam's independent profile, she can access jobs across multiple locations. It's as easy as log in and teach. Deloitte predicts more than 940,000 international students in Australia by 2025, and Australian certificate, diploma and English language courses attract more international enrolments than universities, growing in popularity at 12 to 14% per year. We have 4,000 providers of these courses compared with just 43 universities. When combined, China, Korea and Japan have 68,000 colleges and India has 39,000. Our competitors lack full solution marketplaces, and ReadyTeacher is the only platform for finding on-demand and long-term borderless staff. But it's institutions recruiting the traditional way that is our number one competition. Here's what one of our customers, Rebecca Ballin from Box Hill Institute, said: "Your ReadyTeachers slipped straight in, created resources, delivered programs, and we cannot thank you enough." This positive sentiment is reflected across our member network, who have paid for over 15,000 teaching hours. We've registered 580 qualified teachers, and we take a percentage of their hourly rate. In future, we'll introduce a freemium model for institutions. My background includes teaching adults in the UK, Europe and Australia, and I'm passionate about creating cross-border employment opportunities for teachers. Our senior architect, Cleverson, is an AWS expert with more than 20 years experience, including on recruitment platforms Selecti.com. Technical lead Anson has dual masters in IT computer science from Oxford and Melbourne and found ReadyTeacher through a local university internship. We have vacancies for core team members and advisors. So whether you need a teacher for one lesson or a longer 20-week course or a content creator for your online course, we deliver our fully screened and rated ReadyTeachers to any institution, anywhere. Help ReadyTeacher reach for the title of freelancer.com for certificate, diploma and English language teachers. Thank you. And now I'll pass over to Greg from Augmented Haptics.
Thank you. So I'll wait for your cue, Sophia.
Go for it.
Can you make sure my slides are big and my face is small, please?
Easy.
Thank you. Our world faces many big challenges. Most of these can only be solved by the engineers and scientists of tomorrow. But finding ways to engage young people with science and engineering is a real challenge. Existing teaching aids for science and engineering are too clunky, too ineffective, and simply not much fun. They're also far too expensive. So we developed something better, lots better. Augmented Haptics is a portable, compact classroom in a box. It reinvents how we learn about complex things in science and engineering. Components can be assembled to recreate all sorts of scientific phenomena. Structures, mechanisms, principles in energy and physics, all of this and more can be created by the users themselves. Touch is so important in learning. It's so simple and so effective and yet rarely exploited in the classroom. But that's not all it can do. Here, the physical objects come to life. A projected augmentation makes the invisible become visible. Things like the flow of forces are magically revealed to the user, helping to build intuition in otherwise complex concepts. Both scripted learning and free play is made possible. The cool thing is that our software works in isolation too, which is of course extremely valuable in a time of remote learning like now. So I've been teaching structural mechanics for almost 10 years. I'm an expert in STEM education. Fabian was once the best student in my class, a computational powerhouse, and so now we're co-founders. Professor Neil Thomas, MBE, founded one of the world's most innovative engineering firms, Atelier One. As our first investor and a real champion of our cause, Neil is very influential. We have endorsement and support from the Royal Academy of Engineering. Even Australia's chief scientist, Alan Finkel, has seen our tech and loves it. We've developed and audited a robust business plan with a phased expansion for our patent-protected technology. It all starts with a beta program in higher education, our area of expertise. When we showed this to Cambridge University in the UK, one of the pilot members, they asked how quickly we could deliver 300 units. That would be a revenue of $6 million. Phase 1, we will see an expansion to further STEM disciplines and markets, such as vocational education. We'll transition to a service model which will generate recurring revenue and lock customers in. We'll expand our computer vision tech to facilitate haptic interaction without the wand. Phase 2, we enter secondary education. Here we launch a marketplace full of great curriculum-aligned content. Finally, in phase 3, we'll have a smaller version for the consumer market where our reach will basically explode with gaming and franchise affiliations. This phased tech rollout serves to moat our product. For the addressable market, we can look at how much institutions spend on STEM teaching equipment and services. This is our target market for phases 1 and 2. We're focusing on 4 countries, but the point is this: the business is highly scalable. The reason this product is so attractive is not just the great technical innovations, but that the competition costs so much more and does so much less. It's really that simple. This product is not just for structures in higher education. The innovation of combining active play, touch, and augmentation is so powerful, and we've mapped out how to expand this to electronics, heat transfer, coding, and much, much more. Augmented haptics is going to revolutionize STEM education. The possibilities are endless. Thank you.
Lovely. Thank you so much. So now I'd like to invite the judging panel to ask any questions that they have of the pitch presenters. Otherwise, I can jump in with a couple of questions I have up my sleeve. I'll start with a question.
I have a.
Go for it.
Sorry, I just have a very quick question for Sarah. So just actually 2 questions. Forgive the ignorance, but you're offering very specifically targets, I think English and diploma and teachers. Is there something, again, forgive the ignorance, is something unique about that skill set that is very different to other sort of interim teaching needs? And secondly, I think building I'm not sure you'd call it a marketplace, but building a marketplace is notoriously difficult, and sort of solving that cold start problem, not having suppliers and then not having buyers, and when you don't have suppliers is really hard. And so congratulations on getting to the first sort of 500. How long has that taken you? And, how do you see scaling that? How are you planning on scaling that over time?
Which question should I start with? I think I'll answer the supply versus demand. I mean, with COVID-19, we're now seeing obviously an oversupply of teachers, particularly in Australia, but we're seeing a huge demand in places like Vietnam. They're desperate for teachers and they can't get them onshore because of travel restrictions. So I think, like with any marketplace, there is supply and demand is that give and take and pull. And I'm very fortunate to have good connections and a very good, strong teaching community. And I also, really get involved as much as I can to kind of keep that steady stream of supply of teachers. But we certainly need more institutions at the moment to keep up with that supply. I hope that answers your question. For the other question, I think there are quite a few differences between, even English language and vocational. So I don't use the word vocational in my pitch because not everybody knows what it is. But the certificate and diploma type courses, they require a different teaching style, different approach, and obviously the content's very different from, say, an English language course or a university degree. And I think there is also a marked difference between, say, a primary and secondary school teacher's approach and someone who's teaching adults. You know, we have international students here that spend a lot of money to be a part of our institutions and complete these courses that we have here and online. They expect to be treated like customers. So we do notice a different approach, particularly in building relationship connection, managing some of those social difficulties or challenges with learning for adults. So I hope that sort of answers your question as well.
It does. Thank you.
Okay, thank you.
Can I ask a question of Greg? You said in your pitch that it's highly scalable. Can you just explain to me sort of the price point for and also how what the model is for monetizing it beyond year one?
Yeah, so phase one, the kit, which includes all of the tech that's embedded in it with the projector and all of the computer vision enabled computation, that will cost $18,000, which it undercuts normal lab equipment for universities. In fact, lab equipment is incredibly restrictive and expensive equipment. So we're undercutting it by more than a factor of 10 for a lot of pieces of equipment. And every subsequent phase, so phase two, we're expanding to vocational and industries, and then phase secondary education. So obviously the price has to come down with each phased expansion. And of course, by the time we get to secondary education, it needs to be quite a bit cheaper. And the final phase in the consumer market, it should be around the between $1,000 and $5,000 mark. So it really has to be. The price will come down as the market goes up. That's why we've put it in this phased structure.
Okay, thanks.
Great. So the judges are going to take a few minutes to deliberate, and we've set up a poll so you can vote for your favorite pitch, and the results will be shown after the judging is ended. So while the judges are in discussions, I would like to introduce Hugo Richards, founder of Distech, an AI platform for detection of dyslexia. Welcome. Distech won the EduGrowth Business Start competition in 2019 and went on to be a semi-finalist in the Milken Penn Business Plan competition, the world's most prestigious and well-funded EdTech startup competition. Before I ask Hugo to join me to answer a few questions, let's show you some of the work Distech does with a short video. Thank you so much again for joining us today, Hugo. Before we get started, I thought I would clarify the polling. So the poll is in the Tasks tab in the Works Up agenda for anyone that wants to vote in. But let's get started with some questions. So Hugo, what have been some of your successes since you won the EduGrowth Business Start competition?
Thanks for having me, and it was great seeing all the pitch of all the startup just before me. It was great. Well, look, it's heaps has been happening for us. We've launched in June this year, so it took us a couple of months to get all the research done and really much put the screening out in market. Really recently, we've actually been expanding in the US and in the UK. We're about to gain exposure to over 150,000 teachers in the US. We're currently in discussion with the Department of Justice here in Victoria. So we're kind of, we're having a lot of opportunity around us. And we've been working with association in the UK, in the US, and here in Australia. So it's been fantastic. We've been helping a lot of children, but also adults, turns out. So it's been great. And, we look forward to hopefully COVID, restriction getting a bit better. And we're really looking forward to what next year is going to be for us.
That's great. And what has it been like taking part in the Milk and Pen business plan competition?
It was a good process. So the application that we had to put in for the semi-final was quite intensive, and it was good because it basically allowed us to sort of put some information together, and they've asked some question that we didn't sort of ask ourselves. Well, kind of we did, but we didn't write it down, so we had to write it down. And then just the network, like we've been able to make large amount of contact in the US, and now we have sort of grown network from here in Australia to really much the US. We've been having a lot of connection in the US, and regardless of the result of the competition, we still have those contacts, and we're still working with those people, and we're in an ongoing conversation with them to try and see where we can do business and help each other. So it's just been a great experience, to be honest. I think it helped us. It actually gave us a boost in the growth and the business development. That's for sure.
Oh, David, I think your sound is off.
Thanks, Sophia. Hi, Hugo. Nice to see you. I've been here for a while. So the last time we spoke, you were meant to be flying to Philadelphia to go to do the Milk and Pen business plan. Tell me about that process. Did it change any of your business plan or your thinking around the business?
Well, I actually was, as well as Philadelphia, I was about to go to San Diego because we've been shortlisted as the Elite 200 for the GSV Summit as well. So this year for us was a big one. We were going to do all sorts of different things that obviously didn't happen or happened online. We've asked ourselves, so we've launched in June, and it was a big decision for us because we were planning a lot of PR and a lot of marketing campaign around that, and COVID was on top of everything. So the big question was, do we launch now, or do we actually wait for this sort of crisis to pass? So I guess we've learned to sort of work remotely, and it forced us to grow the business without physical contact and going to conference and things like this. So yeah, it sort of has had an impact in terms of how we grow the business, how we manage the marketing. Now we're much more on social media. We've launched something called Ask a Speechy, where like every month we invite an expert and we have a chat with them. So it's really much
I've
pushing
seen it on your LinkedIn feed. I think I've actually watched one or two of them. I think it's a really good name, by the way.
Yeah.
So it's making some impact. I'm interested a little bit about the refinement that happened through that Milk and Pen business plan competition. Was there a change to the way that you thought about the business before you spoke to a whole bunch of mentors and to what you're doing now?
I think what we've gained is knowledge about the US market. The US market is very, very different than the Australian market in terms of education. And specifically depending on the state. So because we're sort of, we work with learning disability, and so we come under specific legislation, like we're not a common EdTech company. And so every state in the US have different legislation and different funding available. So it's a big country. So we did gain a large amount of insight as to what's happening in the US in terms of EdTech. How do you sell in the US? What's the current landscape of EdTech in the US? That's really much the knowledge that we gain. And given this, we've actually adapted our sales strategy and how we approach the US market.
Was the US on your horizon though?
The US was actually not. What happened is that we've been in an ongoing conversation with potential investor in the US, and they've put us in touch with now client of ours, which was not client before, and so that sort of triggered the interest for us in the US, and the Milk and Pen just added on top of this, where we've made all those contacts and we've learned so much about the US. So it wasn't on the list. It's been dumped on the list by people that we've met and connection. And to be honest, so far it's been great learning experience.
Yeah, I think one of the really big opportunities or big benefits of a big program like the Milk and Pen Business Plan Competition, which is the largest business plan competition for EdTech in the world, is that you get to meet some other teams. Did you spend some time even virtually networking with the other teams in the program?
Yeah, absolutely. So what they did is it's quite great because they've set up a Slack channel. And so you could like literally go in there and start chatting, and you have different channels. So you can hang out with the startup, you can talk to the mentor, you can talk to the judges. And so, yeah, we've had a couple of discussion with different startup over there in the US. And it's just been great learning, what's their challenges, how are they building
Did you meet anybody else doing something similar to you?
No.
That's good. That's good.
Yeah, it's great. I mean, most of the startup that we've seen, they're like, online lesson or curriculum based online, that sort of thing. We didn't really met any startup that really focused on the tool and the technology that we built. So it's been good. It's been really good for us,
And was there something that someone was doing in their business and the point that they've got to that you thought, actually, I'm interested in this, I might want to do something, I might want to, what's the term I'm looking for, borrow from them and do something different in your business?
What's been, well, not really, but here's an interesting thing that happened. So we've rolled out a B2B2C business model. So what we're doing now is that we're working with organization, and they can refer their client or student to our screening technology. And generally, depending on who we're dealing with, there's a commission based. And so what's happening is that we've met with different startups, and some startups, there's two of them that were working and having some technology around literacy in the US. And so it turns out they were really interested into our technology, and we were really interested into how we could potentially help them, grow, as well as them helping us grow as well in the affiliate model. So we're in current discussion with them to see how we can sort of, integrate our technology with theirs. So it's just been great having this conversation, because we can sort of integrate with any platform really. And generally when someone deal with literacy and teaching, we actually come in before, we don't replace their product. We like just a plus, an add-on that they can leverage to get.
That's fantastic to hear, Hugo. It's really nice to hear that a program that we decided and we started has got that international pathway, and an organisation like ReadyTeach's been able to succeed. So I'll hand over to Sophia for a moment.
Thank you so much. That was great to learn more about that. And our judges seem to have returned a decision, which is pretty exciting. So I'd like to hand over to David, the Managing Director of EduGrowth, to announce the judges' decision.
Thanks very much, Hugo. And
Thanks,
I think
David.
we've got our judges with us. Thanks very much, Sophia, as well. I think we've got Srdjan and we've got Cheyne and we've got Karen, I think. All right, so we've got Srdjan and Cheyne with us, and I think Karen's coming to join us as we speak. So my understanding is that the judges have spent quite a bit of time deliberating, and I think you may have some comments to make. Cheyne, did you want to go first? We can't hear you, Cheyne. I'm sorry, I don't know if you're on mute.
Sorry. Yep. The only quick comments I'd make is, I thought all the businesses really interesting and compelling. On the sort of Digii front, just be really curious to understand, and it's probably something to watch out for, is the role that regulation and sort of government regulation will have in helping to sort of propel Claire's offering over time. And I think on the sort of ReadyTeacher front, I think just continuing to solve the problem of demand and supply, which will be key to the marketplace, will be the key to future growth. So, yeah.
Fantastic. Srdjan, did you have something you wanted to add in there?
Yeah, so firstly, congratulations to everyone who pitched, fascinating businesses, and we wish you the best of luck and success. And also caveat that, we make this decision on a very quick presentation, so don't take that as a reflection of any of your businesses necessarily. My question or comment was in relation to Greg, and I guess, there's some very promising signs, I think, in terms of, Cambridge and intent to purchase, or the discussions that have been had. I think I'd just sort of encourage you to spend a huge amount of time with actually the users of the product. So be they professors, lecturers, lab technicians, students, ultimately, just to ensure that the product market fit is there. I think conceptually what you presented is really quite interesting and exciting, but just make sure that actually you're solving a problem that the teachers and, the lecturers in your case at this stage, are looking to solve themselves.
Thank you very much, Srdjan. We've got Karen back as well, and while she gets herself set up as well, it's important for us to remember we're really early stage businesses, and we've specifically screened for, this is the encouragement award at the Melbourne EdTech Summit. So yes, absolutely, great comments. Thank you. Karen, did you want to add something in there as well?
Yeah, sure, David. I was just going to congratulate all of them, because it's a tough thing to pitch and to try and compress lots and lots of work in a very short space of time. I just had a comment perhaps with Grandshake that the career guidance space is going to be sort of there are lots of people operating in that space, and I would just perhaps pass on the piece of advice to directly address the competitors in that space, and to really make it clear, why you're going to win that market, as opposed to being sort of a great number two, and that would improve your pitch.
Fantastic. So thank you all very much. I think we actually have all of the pitching companies with us. So I think we've got them. I think we're going to add them in right now. And then I think I get to announce, I think. Yeah, I do. So we've got Greg. We've got Sarah. We've got Dewal. I'm just looking around my screen. We've got Claire. We've got Sarah. We've got Dewal. We've got Greg. Okay, we've got everyone's here. All right. So thank you all. There were many companies who supported and submitted a recorded pitch that was screened down, and these are the 4 that were decided to be the most interesting that we wanted to present at the Melbourne EdTech Summit. I just have a lot of noise in this here, so I have to take the control room out of this here because I can't even hear myself think because there's so much activity happening in the background. And so these are the 4 that we thought were really interesting. We presented them to the judges, and the judges have made the decision that Digii is the winner of the inaugural Melbourne EdTech Summit pitch competition. Claire, congratulations.
Oh,
I'll clap for you.
Oh, thank you so much. That's really exciting. I think this is just such a passionate project for me. It comes out of a space of enormous hurt for our young people. So this is wonderful, wonderful validation, and I'm very grateful. Thank you so much.
So I will begin by saying thank you, Dewal, for your pitch. Sarah, Greg. Let me start again. Dewal, Sarah, and Greg, thank you so very much. Claire, hang around. Srdjan, Cheyne, Karen, thank you so much for the session that you did today, and then judging the pitch competition. Thanks very much.
No worries. Thank you.
Thanks, everyone.
And Claire, where's Claire? Claire, I want Claire. Where's Claire?
Here I am.
Sorry, we said goodbye to you, but we lost you in that process. We're going to organise some prizes for you. We've got some credits with AWS. We've got some mentoring that we're going to give to you, and we're also going to connect you with some other programs that we have as well. So thank you very much, and congratulations.
David, thank you, and thank you to EduGrowth and this fantastic summit that you've put together. It's been incredible, and this is remarkable. It's hugely exciting. Thank you so much to all of your team for all of their exceptionally hard work.
Thank you, Claire. And that sort of now allows me to come towards this is now coming towards the end of the Melbourne EdTech Summit. So it actually is my incredible pleasure to just note that the past few days has reminded us that Australia has a central role in the digitisation of education around the world. Over the Melbourne EdTech Summit, we had 1,300 delegates in conversation with 83 speakers, including educators, university leaders, investors, EdTech entrepreneurs, and the consultants, technologists, and government players essential to reimagining education in the digital world. The Melbourne EdTech Summit was only possible because of our summit partners. Global Victoria, thank you to Carolyn Hartnett, Stuart Bland, James Edward, who share the belief that Victoria is a great place to build an EdTech business. Pactera, where's Bo and Susie, a trio of incredible Australian EdTech entrepreneurs taking on the world. AWS EdStart, a team that truly walk the talk in supporting EdTech companies in every stage of their growth. Thanks Sam Harris and Katie Heritage for fighting the good fight for EdTech companies. This entire program is only possible through the incredible work of the EduGrowth team. The 3 days of this summit exist because of this team's unbelievable work. A special shout out to Sarah Lamont, who coordinated this program at every single stage and worked tirelessly to pull this program off. Ruth Jackman, who drives the entire marketing communications program to ensure that we got the delegates that we had here and had an incredible impact on, and the entire EduGrowth team, including Jeanette Tran and Sophia Hyland, who have made my vision of a truly Australian EdTech Thought Leadership Summit that places our conversation on the global stage come to life. And finally, an incredibly big thanks to the 1,300 people who registered and dropped by the summit over the last 3 days. It has been a great honour putting the program together, and we'll see you next year for the Melbourne EdTech Week.